Hey guys, Todd here. So remember how a lot of highly leveraged energy companies were about to go bankrupt as crude oil was crashing through mid-20s? Well, crude oil found a low, it's rallied back, it's allowed some of these highly leveraged companies to come back and these high yield markets to come back from the brink of potential disaster. Well, we've come to a very particular level that's going to have a big impact on where crude oil goes and the S&P. So to start, let's take a look at HYG on the daily chart. Okay, this is the high yield ETF. And you can see the market has come back pretty sharply from its pretty serious decline. So I want to do a fib retracement just to outline a potential zone of resistance. And the way you do that is you just take the blue dot high, which is the first major swing high, down to the absolute low, which is your major swing wave low. I'll just pull him across, and then let's erase the retracements that aren't going to come into play. 618 I'm going to keep, 707 I'm going to get rid of, and 786 is going to be a key zone. So we have a pretty good zone of resistance from the daily right in here. Okay, let me just fill it up. Let's give it some color. Can't have just dreary black. There we go. So 81.73 to 83.63 is serious resistance from fib retracement on the daily. Okay, let's get down to the 195-minute chart and kind of refine this zone. So the rally back has been in a nice five-wave move. So 1, 2, 3, 4, 5. And a lot of Elliott guys would say, well, Todd, what the hell are you doing with all these waves in the middle here? Well, a good five-wave move should have a clean subdivision in your third wave. Your third wave really should break down into 5 clean waves, and there you go. All right, so then we go up in 3, down in 4. Now we have one more little move up in wave 5, and there's a zone of fib resistance between 82 and 84. Remember, we had that daily fib resistance as well into the 83, 84. So guys, there's a wall of resistance here in HYG. And just to show you how important this market is to the overall market, watch this. I did this for members today. In the members video, I almost fell out of my seat. Watch this. We're going to overlay the SPY. Oh, how you doing? It's the same market. Like, it's the same market. There's no difference. HYG and SPY, who would have thunk it, right? So what that means is if HYG starts to back away, SPY is in trouble and potentially crude oil is in trouble. So trade I'm looking to do here, guys, is I love selling call credit spreads above FRZ, fib resistance zone, into 83. Something else that I think is pretty comical here is look at the open interest in the HYG 83 calls. There's 33,000 calls on the open interest, and there's nothing even close to that size anywhere else. The closest is the 82 calls at 14,000. So I think there's going to be quite a battle at 83. Personally, with everything we just did, I'd like to sell into that. So I would like to go ahead and I'm going to sell into that and pretend, and not pretend, I'm going to sell into that and count on people trying to lean against that 83 and try to screw those calls that are open at 83 and make sure they never see the light of day. So right now you can get 20, 21, 22 cents for that. Depends on where we open tomorrow. You know, you're going to risk 79 bucks to make 21, but when you have all the fib and Elliott lining up to say you're going to have resistance in that zone, your probability of success is quite high, guys. So that's kind of pulling everything together. We hit crude, we hit high yield, we hit the S&P. We're pretty overcooked on the top side, and I think it's time to start looking on the downside. You're still here? I guess you liked the video. If you did, go ahead and click the thumbs up button or subscribe to this channel directly below, and you'll get the videos in real time. Or you're gonna have 7 years of bad luck trading and you have to babysit Jake and Brody.